Good evening everyone, we are Group 1 and today we're going to present the XBRL Reengineering Financial Reporting and Controlling the Financial Reporting System. Financial data reporting through the internet has become a competitive requirement for publicly traded companies. Most organizations do this by posting their financial statement and other financial report as HTML or hypertext markup language documents on their separate websites. Users such as the Securities and Exchange Commission, financial analysts, and other interest parties can then download these documents. Any analysis of the data contained in the reports required manual entry of the data into users' information system. It is because HTML report cannot be easily processed through IT automation. Extensible Business Reporting Language or XBRL is the solution to this. It is an internet standard specifically created for business reporting and information interchange. Its purpose is to make publishing, exchanging, and processing financial business data easier. This is also derived from other internet standard called Extensible Markup Language or XML. What is XML? XML is a meta language for describing markup languages. The term extensible means that any markup language can be created using XML. It involves the development of markup languages that can store data in relational form and map tags or formatting commands to data values. Hence, XML can be used to model an organization's internal database data structure. Figure 6.39 compares the HTML from XML using a bookstore order formatted in both languages. Despite the fact that both examples contains the same information and have similar structure, they have significant differences. HTML is used for data presentation. The book order in this example can only be viewed visually and must be manually entered into a bookstore order entry system for processing. While XML is used to store and transfer the data, the tags are customized for the user in the XML order. The user's program can read and interpret the tag data. Hence, the XML formatted bookstore order presents order attributes in a relational format that can be immediately imported into a bookseller's internal database.
XBRL is an XML-based language design. It is an internet standard specifically designed for business reporting and information exchange for preparing, publishing, and automatically exchanging financial information including financial statements of publicly held companies. XBRL is typically used for reporting aggregated financial data, but can also be applied to communicating information pertaining to individual transactions. In early period, it is difficult to compare information with no internal structure. Without XBRL, the creation and sharing of financial information is extremely difficult task. For example, to accountants wanted to share information, it will be difficult because accountants using two different software platforms are faced with rapid decaying of data. Accountants must restructure and map financial information so those information will fit into their software system. But through XBRL, the sharing of information will be easier. The figure 6.4 shows the XBRL reporting process. The first step is to select an XBRL taxonomy. This is our classification schemes that are compliant with XBRL specification to accomplish a specific information exchange or reporting objective, such as filing with the SEC. In simple terms, taxonomy is a list of definition or metadata that defines something. The next step is to cross-reference each account into our reporting organization's general ledger to an appropriate XBRL taxonomy element. This is the tagging. This we can see in figure 6.41. This snapshot shows various general ledger accounts and their values. Currently, these data are organized and labeled according to the reporting company's internal needs and conventions.
Mapping is the process of comparing the concepts or data in the financial statements to the elements in the XBRL taxonomy, assigning a taxonomy element to each financial statement concept or data. The mapping process is accomplished using a simple tool such as the taxonomy mapper. In Taxonomy Mapper, there are 3 steps on how to map data. First step is to select the XBRL taxonomy element. Second, select the company GL account. And for the final step, click the map button. We can see that the XBRL tag labeled cash, cash equivalents, and short-term investments is mapped to the database account labeled Cash in Bank Canada. After the mapping process is done, each database record will contain a stored tag in the taxonomy element column or field as shown in this figure. Note that data mapping needs to be done only once, but the embedded tags are used whenever the data are placed in XBRL format for the dissemination and reporting of financial information data to users. This allows business entities to provide expanded financial information frequently and immediately to interested parties or users. With the data structure with XBRL tags, it will be then validated to identify any errors in the XBRL specification. Once errors are corrected, the computer or software generates the instance document. The instance document is an XML file that includes the company's specific reporting information that computers can intelligently recognize and exchange. The XBRL instant document can now be published and made available to users. But before that, it needs to be ensured that the instance document is a valid instance document and all the information has been correctly reviewed and captured in the instance document. The company can be placed on an intranet server for internal use. It can be placed on a private extranet for limited dissemination to customers or trading partners, or it can be placed on the internet for public dissemination. In its current state, the instance document is a computer readable for analysis and processing. To make it more human readable, HTML layout rules can be provided in a separate style sheet that web browsers use to present the XBRL information in a visually appealing manner. Users, such as investors and analysts, can utilize the instance document to facilitate their decision-making process.
Now let me discuss to you the current state of Extensible Business Reporting Language or XBRL reporting. Because XBRL is an important information exchange technology, all members of the financial reporting community should be aware of it. XBRL will most likely to be the primary vehicle for delivering business reports to investors and regulators in the near future. Recent global progress toward that goal has been significant, and I will present to you with some of these summarized developments. Since October 2005, banking regulators in the United States have required quarterly call reports to be filed in XBRL. This requirement affects over 8,000 banks. In April 2005, the Securities and Exchange Commission launched a voluntary financial reporting program, allowing registrants to supplement the required filings in XBRL exhibits. In September 2006, the Securities and Exchange Commission announced its new electronic reporting system for XBRL filings. IDEA, which stands for Interactive Data Electronic Application, is the name of the new system. In May 2008, the Securities and Exchange Commission issued rules requiring large publicly traded companies to adopt XBRL by December 15 in order to meet financial reporting requirements. Internationally, similar developments to encourage or require XBRL have occurred. The Tokyo Stock Exchange has been accepting XBRL data files since early 2003. The Canadian Security Administrators, or CSA, established a voluntary program in 2007 to assist the Canadian marketplace in gaining practical knowledge in preparing, filing, and using XBRL data. Certain companies are required to use XBRL by regulators in China, Spain, the Netherlands, and the United Kingdom. Furthermore, the use of XBRL will make it easier to comply with the legal outline requirements, which were laid down in response to widespread concern and skepticism about financial reporting standards. XBRL, in particular, can aid in the earlier reporting of required financial statements.
Controlling the FRS. Management design and implementation of control over the financial reporting process are required by the SOX legislation, which includes the FRS and the individual transaction processing systems that feed data into it. But first, here are the potential risks to the FRS. Number 1, a defective audit trail. 2, unauthorized access to the general ledger. Number 3, general ledger accounts that are out of balance with subsidiary accounts. And number 4 is incorrect general ledger account balances because of unauthorized or incorrect journal vouchers. These potential risks were not controlled may result in misleading information to the users. It may lead to litigation, significant financial loss for the firm, and sanctions specified by SOS legislation. Cause internal control issues. First is the transaction authorization. For example, is the journal voucher, which authorizes an entry to the general ledger. These vouchers have numerous sources such as cash receipts processing, sales order processing, and financial reporting group. Proper authorization by responsible manager at the source department is significant in recording these journal vouchers.
The general ledger provides verification control for the accounting process. To do so, the task of updating the general ledger must be separate from all accounting and asset custody responsibility within the organization. Therefore, individuals with access authority to general ledger accounts should not, first, have record-keeping responsibility for special journals or subsidiary ledgers. Second, prepare journal vouchers. And third, have custody of physical assets. Notice that in Figure 6.38, transactions are authorized, processed, and posted directly to the general ledger. To compensate for these potential risks, the system should provide end users and general ledger departments with detailed listings of journal voucher and account activity reports. These documents advise users of the automated actions taken by the system so that errors and unusual events which warrant investigation can be identified. Unauthorized access to the general ledger accounts can result in errors, fraud, and misrepresentations in financial statements. SOX legislation explicitly addresses this area of risk by requiring organizations to implement controls that limit database access to authorized individuals only. A number of IT general controls designed to serve this purpose were presented in Chapter 4, including properly assigned user views, authorization tables, data encryption, and so on.
Next is the accounting records. An audit trail is a record of the path that a transaction takes through the input, processing, and output phases of transaction processing. In simple words, an audit trail is the documented flow of a transaction. Audit trail involves a network of documents, journals, and ledgers designed to ensure that a transaction can be accurately traced through the system from the initiation to its final disposition. An audit trail facilitates error prevention and correction when the data files are conveniently and logically organized. Thus, a well-run accounting system should have a clear audit trail for all transactions. Also, the general ledger and other files that form part of the audit trail should be detailed and sufficient enough to 1. Provide the ability to answer inquiries, for example, from customers or vendors. 2. Be able to reconstruct files if they are completely or partially destroyed. 3. Provide historical data required by auditors. 4. Fulfill government regulations. And 5. Provide a means for preventing, detecting, and correcting errors. Independent verification. The general ledger function acts as an independent verification step within the accounting information system. The FRS produces two operational reports, the journal voucher listing and the GL change report, which provide proof of the accuracy of the process. The journal voucher listing provides relevant details about each journal voucher, such as the transaction date, the transaction amount, the description of the transaction, the account number, which are then posted to the GL. On the other hand, the General Ledger Change Report presents the effects of journal voucher postings to the GL accounts. The following figures present examples of a journal voucher listing and a General Ledger Change Report.
Though the benefits of XBRL have been extensively researched, we can't deny that it also has its share of internal control implications. And in this section, we have 3 specific areas of concern. The first one is taxonomy creation. So as discussed earlier, taxonomies are categorization or classification schemes compliant with XBRL specifications which intends to accomplish specific information exchange or reporting objectives. Taxonomy creation involves analyzing context, content, and users within a defined scope, wherein the analysis results would serve as input for the taxonomy design, including its structure and view. However, taxonomy may be generated incorrectly, which could result to incorrect mapping between data and taxonomy elements, which in turn would result in a material misrepresentation of financial data. To prevent this, controls must be placed to ensure the correct generation of XBRL taxonomies. The next area of concern is the taxonomy mapping error. In this area, correctly generated XBRL tags may be incorrectly assigned to internal database accounts, which would also result to a material misrepresentation of financial data, which would explain why it is important that in the process of mapping the internal database accounts to the taxonomy tags should be controlled. The last area of concern is the validation of instance documents. In this area, we must have independent verification procedures in place to validate the XBRL instance documents generated after the completion of mapping and storing of tags in the internal database. This is to ensure that the appropriate taxonomies and tags have been applied before posting it to a web server.